Hi there, welcome to this week midweek market analysis. So we'll get started by first looking at the dollar index. Now overall, there are two main scenarios that I'm personally looking out for in terms of how the market can eventually develop into. Now first one here is that if this just continue to do a bit of a consolidation and price continue to maintain around 107.20, we can expect a little bit more downside towards 104.60. Okay, so that will kind of complete that wave 4 and wave 5 move to the downside. Now alternatively, what can happen, of course, in line that tomorrow we have the core PCE price index, and on Friday we have the NFP as well as the unemployment data. What can happen over here is that the market can also push off a little bit higher. Okay, I would say let's put it here as a reference point towards that previous high. Okay, so that would be somewhere around 108. There's a good possibility that what can happen from now to then is the market continue to just consolidate all the way until 108, and overall, then what will happen is that this would turn out to be a wave 4, and it's still I would say completely valid for this, because this would then be a 1-2 trade, and from there on we can look for more downside as well. Okay, so overall, the direction is still pretty much bearish. It's just a matter of question as to do we get that move down from here, or do we get it a little bit higher around 108. So the part here is of course to monitor how the price is going to move and develop, and put a little bit of timing in terms of a looking at the news that's upcoming as well. Time it a little bit so that it can be in line with a potential break, and news tends to create that kind of volatility for us. Similarly over here on the euro, okay, so what we're expecting is short term this to continue moving lower towards 1.0220, and that will give us that very clear 1-2-3 potentially as a regular flat, and then from there on we'll expect an upside for the euro dollar. Okay, so for now I would suggest just be a little bit patient. Short term there's a good chance this would just drop, but you need to then assess whether this move here is worthwhile for your trades, right? Personally, I'll be waiting more of the bottom area here, 1.0220, to look for that buy. A pound dollar, it's gonna be a neutral perspective even as of today. There are kind of different possibility of how this can turn out to be. Initially we were looking at this as a triangle, and we expect this to just continue moving up impulsively, but as of now it seems like this is coming down, not really that corrective, and the momentum that we want to see on the upside is not that strong. However, having said that, this 2 peak doesn't really have a RSI divergence at this moment. You can see that RSI did peak as well, so we are also not seeing this as a potential diagonal forming yet. So in all, we just want to give it more time and see how the market play out from here, right? So this is not the clearest setup. There's no possible trade in the near term, so we just maintain a neutral bias and give time the market to turn into a clearer structure for us to capitalize on, right? So pound dollar, we just leave it aside, and then we have some clearer ones over here like Aussie dollar. Okay, so as of now the structure looks pretty clean and clear cut. We're expecting this to form a WXY, so 3-wave move, and of course we have a little bit of fibs here where we expect it to come back to it 6565. So if today you're looking at a retracement pending limit order, okay, this area here will be your potential buy setup with a stop below 6435, and of course an initial target here at 6860. So that's one possible setup. Of course, you can also add in various confluence. You can see over here, we have that previous kind of structure level, resistance, turn support, and ideally if you're looking at a little bit of price action, we want this to come down and then start to slow down as it progresses towards our entry area. So if you're more conservative, then my suggestion is just monitor this area, wait for this crawl pattern to form perhaps on the lower time frame, and then from there on you can look for a breakout, and of course with a tighter stop and that also increases your risk to reward ratio. Alright, so I think Aussie dollar is quite clear. As of now, what I'm seeing, if the market continues to develop in terms of a corrective pattern over here, we have more upside. Now the other one that is potentially setting up already is the dollar Canadian. So this one here, you can see right now the market is testing this zone. But one thing I didn't really like about it as of yesterday is how it came into this zone, right? It came out pretty strong yesterday. So personally, I would say give it maybe today, or even maybe 1 to 2 days. You can look at core PCE price index tomorrow as well, right? So the minimum I would suggest is to give it a day and go down to the lower time frame, like 1 hour, and see if we can get a better confirmation that price indeed would want to reject from this zone. Okay, so what would that pattern be? Of course, if we can see a little bit of a continuation to downside, a tiny bit of consolidation here on a 1 hour scale, that will be a pretty decent entry, you know, with a break of this flag at the top of stop. Again, a very tight stop, risk reward will be very nice. Alternatively, another pattern that this can turn into is it starts to do a little bit of this structure, and you know, you can time it on Friday. We have the dollar NFP as well at the same time with the Canadian labor market. That might give us that volatility that we need. Okay, so these are little details that I think it's important. Okay, it's not just about looking at the area and then you get involved in that trade no matter what, but you know the area of interest, and from there on, when the market comes into that zone, you want to then pay a little bit more attention. You want to look out for things that you definitely want to see before committing to that trade. Okay, so this is on dollar CAD. We're definitely there already. And then we have the dollar yen. Dollar yen over here, I'm maintaining a rather neutral perspective, but slanting slightly towards bullish reversal if we can get that. So we are seeing that price is testing the previous low, and what I like about this is it seems to be slowing down a little bit. So this can possibly turn into a crawl pattern combining with a double bottom kind of structure, and internally this has a smaller 1, 2, 3, 4, 5, and that suggests a potential reversal as well. Okay, so give it I would say another 2 days, perhaps during NFP we might see that setup coming in, and of course from there on we can take a breakout to the upside, stop below, and our primary target will be the top of the wave 4 as a TP1, right? Our very first target. Of course, if it takes off, the upside can be quite significant too. Right, so that's on the dollar yen. Gold over here is rather similar to Aussie dollar in terms of the structure, so we're anticipating a 1, 2, 3 short-term downside. Then around 1704 will be an interesting point to look for a buy. If you ask me, would I be looking for aggressive sell to the downside? For now, my answer is no. I think on a lower scale there isn't much of a clear opportunity to sell yet. So for our here, we're anticipating that move, but that doesn't mean that we'll definitely trade it, right? Because you also want to have a proper and a clear setup on the lower time frame to kind of capitalize on the down move if you're looking at trading it. Okay. So of course, depending on the strategy that you also use, some of you might have valid trades to the downside. For me, I'll be waiting out around 1704 for the trade. Now, so other than gold, over here, crude oil is also pretty neat. We kind of have this little trend line. The market is testing it. Okay. Ideally, what we can see, or what we want to see, is that if the market breaks off the trend line, and more importantly, this high here as well, around 80.4, and following that, we get a bit of a tiny consolidation, then that will be a pretty neat trade to the upside, because that opens up a huge possibility of price going all the way back towards 94. Okay, so this might come in perhaps early next week. We might look at Canadian news having a little bit impact on the oil market as well. So keep an eye on that. However, you need to just be a little bit patient, right? Sometimes things are setting up. It just suggests to you pay a little bit more attention to it, but you still want to wait. Again, I always remind and highlight, right? Wait for the proper setup. S&P index, for the past few days, it has been retracing back. Nothing surprising. I mean, we have been expecting this for some time. It came back towards that 618. Currently is also in confluence with the bottom of this trendline channel. So if you can see a little bit of a bounce here, you know, if you want, if you're trading on like shorter term indices, you definitely can go down to a lower time frame, put in a potential confirmation level for your breakout, and of course your stop can be just at the recent low. If the market breaks above that, that will be your trade to the outside, right? So something like that. And this is more or less still a short-term trade towards the previous high here, because we do have a lot of confluences at the top, right? We have that fib. If I go to the daily time frame, we kind of have also the downward trend line resistance. So if the market is not able to break through that convincingly as an impulse move, then there's a good probability we'll see another move down. Okay, so don't be overly aggressive in your buy. If you're taking this buy up, of course, along the way you manage your trade, protect your capital and things like that. But I would strongly suggest, if you're looking at a buy, do at least take partial profits around 4120, 4128 or 4130. Alright, so that's all from me for today's video over here. All the best to your trading. I'll see you guys in the next one.